All right, well, welcome everybody. The clock tower outside my office just went off, which tells me we're probably time to get started here. We appreciate all of you being with us as we were reviewing over the participants today. It looks like we've got people coming into us from all over the state. We've got Maricopa County's participating with us today. We've got some from the Tucson area, from Pima County. Looks like we've got Mojave County's with us. We've got some from Pima and from, not from Pima, but from Gila County over in the Payson and Globe area. So again, thank you for participating with us today. It's good to have you with us. Just a couple things, again, as I've already mentioned, as everybody came in today, we went ahead and put you on mute. If you have any questions as we go through today, feel free to add those into the group chat portion of this. We will try and answer those questions as best we can. Some questions may be best to save for the end. Some of those questions may come up while we're talking about a specific topic. We always invite questions as part of this. And again, we'll do our very best to make sure we get to all of those questions before we get through the seminar today. So I think that was about all the notes. Afterwards, when we get finished today, we will be sending out a link to the video recording of this so you can review this again or share this with your friends or anybody else that you think might be interested in having this information. So we'll get this back out to you again in an online format for you to be able to review afterwards. So my name is Kevin Peck. I'm the director of the Eastern Arizona College Small Business Development Center. We're located down in the Thatcher, Arizona area of the state, down in the southeastern part of the state. For those who are familiar with that, we've been fortunate now. I'm getting ready to go into my 9th year with the Small Business Development Center Network. We're absolutely love doing what we're doing, and especially in this format right here, I've been able to share information with you about what can we do to either help you get your business started. What can we do to help you go through those steps in order to make that happen? I know that we do have some people today who are logged in who are already small business owners and maybe going through that, okay, did I do everything right? Many times we don't know what we don't know. And so hopefully today we can provide you with a little bit of information about that as well. For some of you who are new to small business development centers, we are funded through the U.S. Small Business Administration, the SBA, and our local individual host institutions. Here in the state of Arizona, we are hosted mostly by all of our community colleges throughout the state. NPC in Northern Arizona, Yavapai College up in Prescott, Mojave College up in the Mojave County area, Pima Community College. So we're hosted mostly here in Arizona through our community colleges. Part of, and really our main job is to provide no-cost business counseling to those who are in business or those who are thinking about starting up their businesses. We do offer a number of classes, seminars, workshops, training to try and help teach and to inform business owners. Many of you have participated in this today being one of those things that we do teach. And again, as we have people coming from around the state, we are one of 26 different centers. We'll show you a state map here in just a moment to let you know what centers do you have in your area to be able to help support you in that. The great part of that is that if we don't know the answer here within our center itself, we have a whole network of SBDC counselors, center directors who are probably going to know that answer for us. And so our job is to try and get that for you as quickly as possible. So not only are we a statewide organization, but we're also a nationwide organization. There's over 1,100 centers throughout the nation with over 4,500 full-time counselors doing this exact thing on a day-to-day basis and counseling a little over 750,000 clients served annually as part of that. As I mentioned, here in the state of Arizona, we do have 26 different locations based out of 10 different centers. Again, we're located all across the state. Many of those are satellite offices that are going to be in your areas. We also have 6 PTAC offices throughout the state. PTAC stands for Arizona Procurement Technical Assistance Centers. The SBDCs, our main role is to work with businesses and to get them established. The role of PTAC is to help you if you are interested in doing procurement opportunities with state and federal government or even local government opportunities. We work very closely with them throughout our state. They've been with us now for about 8 years and provide a wonderful assistance to our small businesses in finding opportunities to contract with the federal government. It would shock you and surprise you at the amount of of products and services that the federal government purchases from private businesses. So it may be one of those things that you may want to contact us to see if there's some possibilities there of you being able to contract with your local, state, or federal governments there. One of our new partners that has just come on with us that we have listed here is what's called, is who are known as the Arizona Commerce Authority. In April, we just started a new partnership with them. They are the leading economic development organization in our state, whose mission is to grow and to strengthen our economy here in the state of Arizona. What they're working for, especially here with us in the rural part of the state, is to help us to grow our businesses so that we can create more jobs, be able to attract new industry into our areas, and to be able to find those targeted industries within those communities to try and help strengthen them through the economic development approach. We're super excited to be able to have them on board. If you have any information, or if there's more information that you'd like about them, they offer a wide array of programs, business training support, access to contracting, access to exporting your goods or services outside of the state. They have a number of resources there. We'd be more than happy to provide more information to you as needed for their organization. We're super excited to have them on board with us. And again, that has just started within the last about 4 months now. So we're excited to be able to work with them. So let's get to the topic at hand. Many of you are here thinking about, what do I need to do to start my business? Or again, some of you may be in business and are thinking, okay, what all have I taken care of? What are some things that maybe I haven't taken care of that I need to cover as part of that? So I always start this off with a number of questions that I want to ask you for you to kind of give some introspection today about why are you really wanting to do that business? The first thing I want you to think about is, do you have the experience or the education in order to be able to do that? What is your background? What's your history in either an education side of things or in your experience, in your work experience, in your career that lends itself towards opening up a particular business? The second thing that we always ask is, do you have the physical, mental, or the emotional abilities to be able to do this? Owning your own business is a roller coaster. For those who are with us today who are our current business owners, you know what the daily grind is like, and some days are very difficult in that. It can take a toll physically, mentally, and especially emotionally as you go through your day-to-day operations with the business. And so we always ask that question is, do you have those abilities of being able to handle those day-to-day scenarios that are going to come up? We always ask, is there a market for your product or service? We have clients who come in all the time who have great ideas, great products, or great service concepts that they want to do, but then developing, is there really a market for this that we can actually turn this into a business, or should we develop this more as a hobby, a side business, and let it organically grow over a period of time before we need to really bring this to market in a full-blown business? One of the big questions, and we'll address this later on in the presentation, is about financing. Do you have a way of obtaining financing if needed? The days of 100% financing are over with. Banks and other investing organizations want to see what we call skin in the game, of making sure that you have an investment in your business as well. We'll talk about credit scores. We're going to talk about how much do you need to put down in this in your business in order for others to want to invest in that as well. Do you have a supportive family? What's your home situation like? Do you have a spouse or children, family members, significant others who are going to be supportive of the time and effort and energy and the attention that's going to be required for you to be able to put into that business? And finally, the last question is, when everybody else has said it's time for you to get out, nobody else is supportive of this, we're fighting in order to make this business a dream. Are you willing to fight for that? Are you willing to be the leader, the champion? Are you willing to be the cheerleader for that business and be able to fight for it when nobody else is willing to fight for it? So I ask you those questions because many times we think, oh, I want to open up a business, I want to make all this money. But sometimes we have to step back a little bit and think about some other factors of the business that many times we don't think about that need some serious consideration as part of that. Now, the SBA has identified a number of years ago 8 reasons why most businesses fail within the first 2 years. There's a high failure rate within small businesses. And I have a firm belief that if we know what the landmines are before we try and cross a minefield, we're going to have much greater success of crossing that. So if we can identify why businesses fail, then we can plan to not fail for those exact same reasons. Let's go through each of these 8, and then we'll talk about how do we resolve these a little bit later. Number 1, lack of experience. We've already talked about that. Trying to open up an automotive shop when you've never even worked on your own car may cause a real issue for you to be successful in that business. Again, we have lots of people who come into the SBDC who have great ideas but have absolutely zero experience in the business that they want to open, but have interest in it. The second reason why most businesses fail is insufficient capital. Not only trying to open the business on a shoestring of trying to open this with as little money invested as possible, either in equipment, supplies, inventory, whatever it may take, but also not having enough capital to be able to carry that business for the first 3, 4, 5, 6 months until it starts to become self-sufficient and you actually break even and then start moving into a positive cash flow situation. In real estate, we hear this all the time: location, location, location. Poor location of the business can be, again, this is the number 3 reason why most businesses fail. This could be due not only to our businesses placed in the area where maybe our target market is, our customers are going to be at, or maybe we have other businesses located around us that are a detraction to us. Maybe we're a child care business and we have a bar on one side of us and a marijuana business located on the other side of us. Not that either one of those businesses are bad per se, but when it comes to the type of business that we have, maybe the other businesses that we have located around us could be causing a lack of clients or lack of customers to come in as part of that. Poor inventory management is another issue why most businesses fail. Either having too much inventory and now being cash poor and not being able to pay the bills because we have it all wrapped up in inventory, or we have not enough inventory because we don't have enough cash flow to be able to carry exactly what our clients or what our customers are wanting. This is a science in and of itself, and trying to manage that. And many times it may take a little bit of time in the beginning to really identify, in spite of our best efforts, what we thought the customer wanted is not actually what the customer wants. And so being able to maintain that and access to that inventory once we've gotten started. If we don't have it in inventory, how soon can we get that back on our shelves again in order to be able to meet the demand of our customers? Many businesses in the very beginning think that they have to have brand new, all equipment, all of their trucks, tractors, equipment, computers, whatever it might be, have to be brand new right off the bat, and it has to be the very best of everything. Overinvestment in fixed assets is another reason why a lot of businesses fail, and that the overhead component of this, the amount of money that needs to be paid out every single month in order to purchase those fixed assets, becomes a real drain on the business. And now the business cannot grow, it cannot thrive because of the overhead demand is on it. And now we get into a negative cash flow situation just to pay for the brand new trucks, the fancy wrapping on it, the brand new tractors or the dump trucks that now we're running with, the finest in all of the equipment. There's some ways of being able to work around that. Poor credit arrangements. Where are we getting our money from, and what do those terms look like? We might think that, hey, I'm going to take whatever I need to. Maybe the 15% interest rate on your credit might be a good deal right now because we think it's going to be short term. But what if we can't pay that off in the short term? Is the interest rate too high, or are our terms too short? Can we finance that for a little bit longer and being able to, maybe we finance it for longer than we need to have a lower payment and then pay that off a little bit quicker. Lots of arrangements and lots of ways how these are structured. So we really always want to take a look at exactly how are we financing these businesses to make sure that the business can thrive as part of that. The 7th reason why businesses fail are people have the idea that the business funds are theirs for them to use for their own personal purposes. Booking the cruise to Jamaica, buying mama some new shoes, out buying meals and taking the family to dinner using the business funds. Technically, Those funds are yours. However, we need to make sure that we're utilizing those funds in the appropriate way and making sure that we're always maintaining a working capital amount in the bank to be able to cover things like payroll, utilities, insurance, inventory, and not just making that our own personal playground for those funds. And finally, last but not least, unexpected growth can be the downfall of a business. I've had the unfortunate experience of working with two different businesses who grew too fast, and all I could see was the dollar signs and wanted to rake in as much money as possible in the beginning rather than managing that business. Let's grow it to the point where the business can again sustain itself, so we're not again getting too much inventory brought in or too many fixed assets to keep up with demand, and managing that growth in a way that would allow those businesses to be sustainable. So you can see there's a pretty wide, varied number of reasons why those. The largest portion of these reasons, though, all have to come down to a financial management of the business itself. And we'll talk about these just a little bit more. Now, while there might be 8 reasons why businesses fail, there's really only 3 ways that we're going to combat these causes of business failure. The first one is business experience. The second one is getting a business education. And the third of these is writing or developing a comprehensive business plan. So let's go through each one of these individually. How do we gain experience? Now, as we talked about already, the most common mistake that most people make is to assume that they can run a business that they have absolutely no experience in. So I've been an owner of 2 different businesses over the course of my career. My first business was a landscape company with a family member, and came into this with absolutely 0 experience in the landscaping field. Coming into this thinking, hey, you bet I can absolutely do this. And I've never had any experience in, okay, what kind of inventory do I need to maintain here? What kind of drip system products do we need to be able to carry on hand for our customers? What about lighting? All those types of things that I really did not have any knowledge about. Now, while my partner had lots and lots of experience in that, my big mistake was thinking that I had all the knowledge and ability to be able to do that. It became very, very difficult for me as an individual to be successful in that, while my partner had been in the landscaping industry for years and years. So there's 2 ways that we can gain experience as part of this. Number 1, go out and get the experience yourself. If you want to open a restaurant, but you've been an automotive mechanic your entire life, then go work in a restaurant for a period of time. Find out what it's like to do ordering. Find out what it's like to work with customers. Find out what it's like to do food prep, to order inventory. Go in and actually wash the dishes. Find out what that's like. Go through every process that you possibly can to learn about that business before you jump in and try and do that yourself. The second option that we have of how do we gain experience is to actually hire it out. Now, again, if we have that ability, we have the finances and funding available to be able to do that, we can bring people in very easily and hire them for their expertise and their experience. Again, if I want to open up an automotive shop, I can probably set up that shop and be able to run it very well, but I'm going to try and hire the very best mechanics that I can for them to come in and be able to do the actual work, or to be the face of the business and to do all the consulting with customers when they come in the door. Many businesses, though, unfortunately, at the very beginning, cannot afford to do that. So in the beginning, you might have to be a jack of all trades in every aspect of your business. Maybe you don't like to do accounting. Maybe you don't know anything about it. You might have to learn how to do that in the beginning, no matter how painful it might be, until you can start to hire out some of those areas that you're not so strong in, to either hire in employees to do that, or hire that out to the professionals and let them take care of those parts of your business. I'm a firm believer in you play to your strengths, but in the beginning, you may have to develop lots of strengths in those areas until you can afford to be able to hire those out. So now let's talk about the business education side of things. We talked about the experience side of gaining that. How do we gain business education? Now, I'm not telling any of you that you need to now go to your local college, your local university, and get a formal education. You can get the formal education if you really think that that's how you want to do that. And the book education is great, but there's a lot of informal education that we can do as well. Lots of resources available online today. Reading books, magazines, articles, blogs, watching YouTube channels or videos. Lots of opportunities of being able to learn about how do I do these types of things. There are more access to those resources today than there have ever been in the history of the world. Now, as I mentioned before, 6 of those 8 top reasons why businesses fail can be mitigated or can be offset just by having an accounting or bookkeeping training. Even if you hire an accountant, you yourself need to understand your numbers. You need to understand what those financial statements are saying. Now, when I talk about financial statements, there's really 3 statements, 3 reports that you need to understand in your business from a financial aspect for you to be able to be successful and know what's going on. The first one is what we call an income statement. Some of you might have heard that also being referred to as a profit and loss statement. The profit and loss statement shows you on that report how profitable were we this month, or on the negative side, how much money did we lose this month. All right, this is taking into account what were our total sales during the course of this month, what were our gross, or what was my cost of goods. If I sold a shirt for $20, but the shirt cost me $12, I have $8 now to be able to pay the rest of my bills. So the income statement will show us our income. It will show us all of the revenues that are going out, all of the expenses that we have that are going out that month, that are attributable to that month. Now, there's another report or another statement that we use that look almost exactly like the income statement, but this is our statement of cash flow. The statement of cash flow shows us, really, to keep it simple, how much cash did we blow through this month, or how much cash did we actually receive this month. This is probably a closer, a more accurate report for us to read in our businesses, because this is going to show us now what was the impact on my bank account. Am I going to be able to pay my employees at the end of next week? How did we do as far as receivables went? Did I collect on all of the invoicing that I did last month? Again, this is probably a better measurement of how we are doing profitability-wise within our businesses. And finally, the last report that we always take a look at is our balance sheet. The balance sheet compares our assets, the things that we own that have value, and compares us on the opposite side of that to the debt that we have, and also the equity that you have within that business. Now, this is just a snapshot in time at any given time for us to be able to take a look at the overall health of the business and say, where am I at in regards to my debt versus my assets? You might have a lot of debt, which means you own very little equity in the business. Maybe you have very little debt, which means that business now is of more value in that you don't have a lot of overhead that you continually have to pay for on a monthly basis. If you were to sell that business now, you're probably going to gain a larger profit or a larger return on that investment as part of that. So no matter whether you have an accountant, a CPA, a bookkeeper, your best friend's cousin, whoever is going to be doing this for you, you need to understand those numbers and what do those numbers mean to you in your business. The other part of the educational side of a business is keeping a pulse on what's going on in the market for your business. Lots of reading, lots of keeping up to date with what's going on. There's local, state, and federal resources that are going to give you all kinds of information about startup information or what's going on within that industry. Social media is probably the best way for you to find information out there today. Facebook, Twitter, believe it or not, blogs are still an important resource to us that are out there. People are still blogging and giving information regarding various types of industries and what's going on with those. Learn to read those, find those, search for those, being able to get that information. If you want to know what's gone on in your industry in the last 15 minutes, jump onto Twitter and do a search for your industry. And I guarantee you're going to find resource after resource after resource about what has gone on in the last little while regarding that industry. Believe it or not, there are still newspapers, magazines, articles that can be read out there, that can be perused for information of what's going on there. Try and find those. It may take some research for more of the paper products of what are out there today. Again, your online resources are going to give you a whole lot more information there. And finally, just be open-minded. Doesn't matter how good you are at your business, doesn't matter how successful your business is. I guarantee you and promise you that somebody else is out there trying to figure out how to get one step ahead of you. We can't get comfortable. We can't become apathetic in our businesses. We always have to be open-minded and be taking a look at that next step to advance our business as part of that. Now, the third way that we combat those initial 8 reasons of why businesses fail are the business plan. Now, I know some of you are thinking, oh, I don't want to write a business plan. This is probably the least sexy part of starting up a business that there is, but it's one that's going to pay you the most dividends on your business. In my world, a business plan is a must. You need to be able to go through and identify what are all the various factors of my business that I may not have considered. In your mind, you might have this perfect circle of exactly what that business looks like. But when we start to go through the business plan and all of the aspects of the business plan, you may identify some real deficiencies or some weaknesses in that business that if we can tackle in advance, then we're not going to have to deal with those later on after you've now already invested thousands and thousands of dollars in those businesses. The business plan basically is just going to be a roadmap. It's going to give us a guide that we can follow to get where we need to be with our business, and what a plan is not only for startup, but also for long-term growth. Many of you have probably taken a vacation in the last, I don't know, hopefully you've taken a vacation within the last year. And some of you, if you're like me, might plan, if it's a quick little weekend trip, I may not plan a whole lot, but I'm going to look for hotels. I'm going to look at a map. I'm going to be able to identify where we're going to be going from like a sites that I want to see, where we want to stay at for hotels. It could be anything. I always say not long ago, it's probably been about 10 years now, we took about a 2-week trip back to the Midwest to see family. I had spreadsheets developed. I mean, we planned this thing for months and months and months in advance, and it was over with within a couple of weeks. So my question to you is, and some of you might be the same way, why do we spend hours and hours and months and months and months planning a vacation or a trip that's going to be over with within a matter of weeks, and we won't commit and dedicate the same amount of time it takes to develop and establish a strong business plan for a business that we hope is going to last for generations and generations, that can be passed on to your children and your children's children? All we're doing, if we just jump into a business concept and our idea and have not properly planned it out or thought it out, many times we're planning for failure right off the very beginning. Now, what types of things do we need to consider as part of all of this? There's a number of different items that we talk about. Our marketing plan. The marketing plan is going to consider all of those things. What is your business? What are you actually selling? Who are your customers? What's your location going to be like? How are you going to actually advertise your business? What's your pricing structure going to be like? All of those things are all part of the marketing plan. What's the front of the house of this going to look like? The management plan or the operational plan. Who's going to run my business on a day-to-day basis? What's their background and their experience? How am I going to pay my employees? What kind of benefits am I going to give to them? How am I going to manage inventory, and where am I going to store inventory at? All of those types of things that go on more from an operational side of the business. The financial plan. Many times this comes down to, how much money do I need to start my business? Where am I going to use that money at? And how am I going to pay that money back over the course of the term of that loan? Or what's the long-term prospects of that? We'll talk more about the financial aspects here in just a little bit. And sometimes we'll get more into the strategic plan, more of the long-term vision. This is more of an existing business type thing that we look through, but we always take a look at it in the fact that sometimes we'll do what's called a SWOT analysis, SWOT, which stands for strengths, weaknesses, opportunities, and threats. We look at the strengths and weaknesses of our businesses as an internal organization. What do we do really, really good? And what do we do that's not so good, that we're really weak in? And then we also look at that from an external aspect of our business. What are the opportunities that we have that we can try and capitalize on? And also, what are those threats that are coming to us? Is there legislation that's happening right now, either on a state or a federal level, that might have an impact on my business? Or be able to provide an opportunity for us as a business? Is there a new business that's getting ready to open up down the street from me that does the exact same thing as me? What opportunities are there that we can compete against them, or what threats are they bringing in as part of that? So all of these different sections force us to have to think about things that, while that may not be real fun and exciting, will force you to think about things that could be extremely detrimental to your business, and provide that roadmap, where those landmines are at, that we can avoid before we even open up business on day one. The other great thing about a business plan is that if you have partners, if you have significant others, whoever else might be participating in this, it gets everybody on the exact same page of what direction we're pulling. Unfortunately, again, thinking about the negative side of this is we've seen businesses who have failed and who have closed down because partners began to pull different directions. And they thought this idea was better than that idea and began to pull away and began to divide and to fracture the business because they all had different ideas and didn't go through the plan in the very beginning of how do we make these things all work together. Now, how formal does this need to be? Well, it depends on who's going to read it. If you're taking this to a bank, if you're taking this to a potential investor, then you probably may have to make this pretty formal. If nothing else, you better do a spell check on this and make sure that it's well organized and structured well. If this is just for you to be able to identify, is this the right business for me? Is this something that I really want to do? And maybe your spouse or your significant other is going to be looking at this. Don't worry about, maybe you want to worry about the spelling because you don't want your spouse to think that maybe you're not what they thought they married in the beginning. But let's make sure, again, that we've taken care of things the way that we need to, depending upon how we're doing this. Again, if this is just someone that you want to look over just to make sure, have I thought everything through? Maybe we don't need to make it very, very formal. Now, a lot of people ask me, Kevin, how long does my business plan needs to be? Well, it depends on what it's going to take in order for us to really go through this process. I've seen some great one-page business plans. I've seen some business plans that people have tried to do on one page, and it was severely deficient in the information that was there. So we'll walk through some of those kinds of things. Again, how do I develop that business plan a little bit better? Some of the things that, again, initially, as you're starting that business plan, I want you to just brainstorm. I want you to take the information that's out of your head regarding your business and just get it to paper. Keep it simple. Just get it out on a piece of paper, whether you like to type, whether you like to just get it out on a written document, however that needs to be, just get the information out of your head. What have I identified over the number of years of doing this is that while the business idea looks great in your mind, when we get it to paper and we start to see the gaps and deficiencies, you start to see things from a different way. The great part of this as well is it also looks, you can be able to see other opportunities, is as you visually see your plan, new ideas, new products, new ways of offering those, new ways of doing business begin to manifest themselves as part of that. Now, I want you to put things in a fairly simple outline. There are all kinds of references available to you. You can go to the SBA website, sba.gov, and they have a great tool that you can use where you can start to drop ideas into categories. So rather than just doing a free flow brainstorm coming out of your head, let's keep things where they need to be. Let's talk about your products and services in the products and services section. Let's talk about your target market. Who are your customers in the target market section? Let's talk about how much money you need and how you're going to handle this financially over in the financial section. So rather than having things spread out through the entire plan, let's drop them into a very simple outline of being able to do that. If you're not sure where that should begin, contact us. We'll be more than happy to provide you with a very simple outline to be able to help you get this information out of your head and into the beginnings of that business plan. Now, the first time that you get this all out, this is not going to be a completed plan. This is an exploratory process. You're going to be kind of digging through things and going, oh, well, that's not going to work because of this. The plans will begin to solidify as you begin to work through the plan deeper and deeper. So don't think that just because we have the information out of my head and onto paper that we have a finished plan. More ideas are going to come. Ideas are going to get scratched. Ideas of how you're going to do things are going to change as you begin to do this exploration into this particular concept. So again, remember that this is going to be a process that you're going to go through as part of this. Part of the business plan is to always remember an exit strategy. All right, at some point in time, you're going to exit your business, either from a business closure, the business failed side of things, and at what point do we need to get out so it doesn't become a long-term financial liability to us? Or at what point are we going to sell this business? At what point are we going to pass this on to somebody else? Some people make a living of just starting a business, growing it for the first 2 or 3 years, and then selling that business and then moving on to their next business. My hope is that you can get to that point of either selling that business and then deciding what your next adventure is going to be. Some of you may be passing that on to the next generation, to your children or to your grandchildren. Whatever that might be, identify what that is. If it's on, okay, this is the dollar amount that I can afford to lose. This is the amount that I can risk at this point for my business. How much can I risk? And then make sure that you draw that line in the sand. I see many times people who say, oh, it just needs another $5,000, another $10,000, another $20,000. And then before they know it, an entire retirement has been wiped out, and we still have a business that's going to fail with nothing to carry that forward. So be thinking about that as you go into that, of what can you realistically afford to lose before it's time to get out of this business. Get help, whether it's from the SBDC or wherever. Research your topic, research your business, find out what's going on. There are industries that are in decline, and that might not be a good time to open up. At one point in time, it was a bad idea to open up a bookstore, but as we're finding now, bookstores are starting to make a small resurgence back. Maybe now is the time, rather than 10 years ago, to open up that bookstore. Whatever it might be, we can help you provide the research that you need to identify what's going on with this industry today. Am I in a growing or a declining industry? Now, as I mentioned before, this is an exploratory process of going through this, but your plan is never really finalized. It'll be finalized, but I want you to remember that this is a live document. The industry changes, buyers' preferences change, buying patterns change, new things are introduced into the industry that you need to always be on top of to include as part of that business plan that you may not have been able to anticipate before. Maybe a new idea comes to you and you go, oh yeah, this is what I want to do. I'm gonna go jump into this. Maybe we did research back in the business planning stage that said, this is something that may come up to us, but we don't want to go down this road for this reason, this reason, and this reason. If we've done our homework in advance, then we're not going to have to go down a failed path because we've already done our research in advance. So keep that as a live document for you. All right, so your business plan's coming together. You've got all of your ideas out of your head. Things are all kind of started to go there, and now you're thinking, you know what, I really want to do this now. What do I do now? One of the first things we need to think about is, how are we going to structure your business? Business structure meaning, how am I going to organize my business legally? So there's usually 3 different ways while most businesses will structure themselves. The first one and the quickest and easiest is just a sole proprietorship. You and the business are all the same thing. This is Kevin's lawn mowing service. I have my Jeep, I've got a small trailer, I've got a lawnmower in it and my trimmers, and I'm just going to drive around and I'm going to mow people's lawns and make them look good. And they can write me a check to either myself, or they can make it out to the business if I have a DBA registered as part of that. Super quick and easy to set up. I basically just need my business license. I might even need a TPT form in order to get that going, but it's very, very quick and easy to do. The drawback of these is that if somebody wants to sue me because I've done damage or I've caused irreparable damage to a particular site or a location and they want to sue me, I am completely exposed all the way through on this thing with liability. So while sole proprietors are great, super simple to do, there are some drawbacks as part of that. On the other end of the spectrum here, we have corporations. Corporations separate the business from the owners. It now creates limited liability, not necessarily as a corporation or as a business, but it creates limited liability from you in that you are no longer the business. They can sue the business, but your personal assets are safe and protected. They're separate from the business. Corporations are a little bit more expensive to run with. They're a little bit more expensive to set up. There's a lot more reporting that needs to be done annually. Annual reports have to be filed, annual shareholder meetings, partnership meetings, all those things that need to be reported to the state on a regular basis. The other nice thing with the nice or negative thing with corporations is that you're now taxed as a corporation and it's set. However, there's no flexibility to that. Maybe you have other tax advantages that you could take advantage of from a taxation side, from a tax bracket side, but corporations are taxed the exact same way. Now, in most states, there are what we call limited liability companies. And these take the best of sole proprietorships and they take the best of corporations and bring them together into this limited liability company or an LLC structure. Again, we separate business from the owner. We have limited liability. Again, they can sue the company as long as we don't pierce the veil. Pierce the veil means we haven't been using the business as our own personal playground. We treat business as business. We treat personal as personal. It's treated as a business and not just as my own personal business. If somebody wanted to sue you and they could prove that you were not handling your business as a corporation or as an LLC, you could potentially lose liability protection. They're fairly cheap and easy and quick to set up. We do LLC forms all the time around here. They take us about 20-30 minutes to do online. Fairly quick to do and very inexpensive. And you have some flexibility there with the tax status. Do you want to be taxed as an individual because maybe your tax bracket is less than what corporate tax is? Or maybe you want to be taxed as a corporation. That's something you'll want to visit with your accountant or your CPA so that they can help guide you through that process. But there's a lot of flexibility with that and how we want to do that in the right way. Now, one of the other big questions, and we're going to go through, from here on out, I'm going to go through a lot of the main questions that we get from a business setup aspect that answer most people's questions fairly quickly and easily. One of the other big questions we get is about business licensing. Business licensing is a fairly simple thing, depending upon where you're from. Let me get my screens going here again. Sorry about that. So business licenses, everybody is going to be required to have a business license from your municipality, whether you're either located in that town or you're doing business in that town. Now, typically they're going to be incorporated towns. So if you're just a small town that doesn't even necessarily have a town hall or a city hall, but you're unincorporated, you're probably not going to be required to have a business license from them. But again, if you're going to be doing business in a particular town, that town or city will require you to have a business license to do business in that location. Counties typically do not require business licenses. You'll want to check with your individual counties to make sure. The 3 counties that we cover here do not require business licenses if your business operates outside of a city limit area. From the state side of things, there may be some requirements depending on what kind of a business you are. If you are selling products and or some types of services, you're going to be required to have a sales tax license. Meaning you're going to sell a product, collect the tax. This is also called, actually, the correct term for this is called a transaction privilege tax license, or a TPT. Then in this case, you'll be paying back to the state any tax that would have resulted from the sales that you do. Most businesses pass that tax along to their customers. If you go to Walmart or you go to a store, you look at your receipt, here's the total of my products, here's the sales tax. That sales tax now gets returned back to the state on a monthly, quarterly, or annual basis, depending upon your business. You may want to register your name with the state or get your DBA, doing business as. We see this a lot with more of the sole proprietor side of things rather than LLCs. So you might want to protect your name, register your name so that nobody else takes that name. Or there might be some specific industry licenses that you have. So if you want to be a cosmetologist in the state of Arizona, you have to have a license from the state. If you want to be a massage therapist, you have to have a license from the state that says you are qualified to do that. If you want to sell insurance, if you want to sell real estate, there are specific industry licenses that you're going to have in order to operate within that industry. On the federal side, there are no business licenses that you need from a federal side. However, we always recommend for most, and almost in every case, that you at least get your EIN or your employer identification number. Sometimes they're called a taxpayer identification number, either an EIN or a TIN. This now gives your business its own tax identity, its own identification number, so that when you file your taxes, or if you need to report an ID number to anybody else for whatever reason, you're no longer using your social security number, but you're now using an identifying number of that to protect your social security number in those instances. All right, Let's talk about funding. This is why you guys are all here, right? Show me the money. This is where everybody comes in to see us and asks, okay, Kevin, I've got this great idea. Where do I get the money at? Well, I'm gonna squelch a lot of thoughts here right off the bat. Unfortunately, give you the bad news first. The number one question that we get in SBDCs are, I'd like to get a grant to open up this business. I hear that there's grants available. I've seen the commercial with the guy in the green suit with the black dollar signs all over it, jumping up and down saying, free money, the government has free money. Well, partially true. However, as a general rule of thumb, just understand and know that there is typically no grant money available for for-profit startup businesses. All right. If that was the case, I wouldn't even be on here doing seminars or working with clients. People would be just coming in here and I would be just filling out grant applications day after day after day. All right. So there is money, excuse me. However, sometimes it'll take some time to try and find that. We'll talk about that a little bit more. There's typically 3 types of funding when we talk about business funding. Number 1 is personal capital. All right. What's in your bank accounts? How much do you have in a savings? How much do you have in a retirement fund? How much do you have that you can put towards this that's going to come out of your own pocket, either out of savings, out of some other thing that maybe you have access and available, other liquid funds that you might have accessibility to? How much are you going to put into that to fund this business? The second option is debt capital. I'm going to go down to Chase Bank, Wells Fargo, National Bank, Washington Federal. I'm going to go down to my credit union. I'm going to borrow money from them now, and I'm going to pay them over time. That is debt capital, meaning now I'm paying them to borrow their money. The third option that we typically have when we're talking about funding is equity capital. Now, meaning I go to a friend of mine and say, hey, Joe, I'd like to open up this business and I'd like to make you a partner in it. I'd like to borrow $25,000 for you and I will give you a 15% share of my business. You are now a partner. You now own equity in my business. So all 3 of these, we always consider every single one of these through in every single business startup process about which ones make most sense. I always worry the most about equity capital in that you're now giving up ownership and control of your business to somebody else because they have the money. So we have to be careful, especially in the equity side, that now you are not giving up your dream, your vision, the way you want to do business because somebody else now has a financial say in your business. There's a lot of ways that we can structure debt capital, equity capital, and personal capital in the. There's literally 1,000 ways we can work around these. It always just depends upon what do we need to do for your particular business in order for it to be successful and not bury it under too much debt to begin with. Now, we talked about the business plan to begin with. Most lenders or investors are going to want to see that business plan. Sometimes they may just want to see the executive summary. Some of them might want to see something more in depth. So that's why we always tell people, if you're thinking you're going to need funding, let's start to work on that business plan, not only for your own self to go through the business idea concept, but also to prepare that in case we're going to go for financing from somebody somewhere along the way. And as I've already mentioned, the money is usually there if we're willing to look hard enough and long enough. Now, our lender situations are going to be a little bit different. Your personal credit history is going to be the main driver of whether or not that money is going to be there for you or not. We may not always get into the best situations on lending, and usually that's going to come for 2 different reasons. Number 1, what's our personal credit like? What's our credit score look like? And number 2, how much do I have to put into this business as well? So again, that kind of then leads into the next big question that most people say when they go to get money is, how much of this do I have to put into this business? Well, it just kind of depends upon the business itself. Usually we're going to see roughly 40 to 50%. Again, now this depends. I don't want to make this as a blanket statement, but usually we're going to end up with 40 to 50% contributed from you. Some of that can be cash. Doesn't always have to be cash. Some of it can be collateral, meaning that I've got buildings or I have land that's going to be going on to. Maybe it's in home equity that we're going to be utilizing to pull some of those dollars in for. However, keep in mind that a bank will not utilize inventory and usually not raw land, okay? Real property out in the middle of somewhere that has not been developed as collateral, all right? So What we usually see, again, kind of more in the range. Again, I don't want to make a blanket statement here because every lender is different. Every individual business situation is separate. Sometimes we might see as little as 10%. Sometimes we might see it upwards of 25, 30% of that. Again, we're talking about overall dollar amounts being invested, what those funds are being used for, and what do we have to secure those dollars with. SBA loans are another question that a lot of people ask about. SBA does have some lending, but when we talked about business startup or business lending, we're talking more of SBA guaranteed loans, meaning I need to borrow $100,000 from a bank, and the bank says, well, we just can't fund that. We're going to lend you, let's run this through the SBA, and the SBA says, hey, yeah, we will guarantee that note. The bank still lends you the full $100,000, but the bank guarantees 85% of, the SBA guarantees 85% of that. Meaning if anything goes wrong, the bank gets their full amount of money or 85% of that, and so it reduces or mitigates the risk that they might have as part of that. Now, I don't think that because the SBA guarantees that you're off the hook for that. Now you not only have the bank coming at you to get their money, you also have Uncle Sam, and Uncle Sam has a whole lot more nefarious ways of getting their money from you, and the tax of and lots of different ways of being able to get those dollars from you to recollect on those loans. Conventional loans, this will be going down to Wells Fargo, National Bank, Washington Federal, wherever we're going to get that loan from. This might even include micro lenders. We have a number of micro lenders that we work with, Axion, Prestamos. We have a Graham County regional lending program here, and they provide conventional loans as part of all of that. Now, even if you're borrowing money from somebody in your family, Aunt Joan has millions of dollars in the bank, and you want to go borrow money from Aunt Joan, you write a professional loan or a professional note for that loan to protect both you and to protect Aunt Joan. Aunt Joan, I'm going to borrow $20,000 at 3% over 6 years. And maybe she comes back next year and says, hey, you're supposed to pay that note back in 3 years and at 6%. And you're like, wait a minute, no, we got those numbers backwards. This is to protect both of you so that everybody goes into this knowing exactly what those terms are going to be. What's the payback expectation? What's the percentage going to be? And when will that note be paid back in full? I don't want family relationships to be damaged in any way, shape, or form because of a he said, she said, or a he said, situation that went on regarding finances. So it doesn't matter who you get money from, make sure that we have that note written up. Those are fairly simple to do. They're easy to take care of. We have those notarized. We take you to somebody who's a notary public, and you both sign it, and it gets notarized and stamped, so that there's never, ever a question about any of that. All right, we've covered pretty much most of the questions that we get during all of this. You might have more questions. Again, if you have other questions, feel free to drop that into the chat screen there. Lots of resources available for you after today. If there's more information or you're requiring more information about some of these things, you're welcome to contact us at our website at eac.edu/SBDC. You can also find us on Facebook at facebook.com/EACSBDC. We're easy to find. Please contact us. You're welcome to contact the Arizona Commerce Authority. They have a small business services page that you're welcome to go to, a small business checklist that we utilize regularly that works out really well in identifying exactly what do you need to have. The SBA, we've mentioned them a couple of times. They are our grant funder and our big support. They have a wonderful array of resources and tools for you to be able to utilize, from business planning to learning about SBA loans to finding other resources in your area that might be able to assist you through these. And finally, our state network, the Arizona Small Business Development Center Network, the AZSBDC, located at the azsbdc.net website. So you're welcome to go to any one of those sites, and of course, you can just Google, how do I start a small business, and you will find resource after resource available to you. It can be overwhelming many times. So we invite you to just contact us. Whatever area that you are in, whether you're in Pima, whether you're in Maricopa, whether you're up in Mojave, whether you're in Northern Pioneer, wherever you might be, contact us, and we are more than happy to try and streamline these processes down to try and help guide you through this process to make it as simple and as easy as possible for you. It's still going to be difficult. Sometimes it's easier, sometimes it's more difficult, depending upon what that is. But our job is to try and help make that as easy as possible for you. So you have our contact information here, our phone number, our email address, and our website. Also Facebook. Facebook is just king, so feel free to reach out to us and contact us with anything that you might need. But if you have any questions, again, don't hesitate to contact us today. It doesn't look like we have any questions coming in today, so we either did a really good job of getting the information out to you, or nobody's quite brave enough to jump into that chat pool right off the bat. So again, thank you for participating with us today. We hope that the information has been helpful to everybody. Maya just contacted us. When will this recording be sent out? Maya, it probably will be either later this afternoon, or probably may not be. Well, we're going to try and get it this afternoon. It does take a couple hours for this to process through our processing process. Not our process, but through our online process. But we'll get that link sent out to you as quickly as possible. Just due to our schedules here, it'll be this afternoon or first thing on Monday morning, but we will get that out to you as quickly as possible there and get that taken care of. So again, thank you, everybody. It's been great to spend this last hour with you. We look forward to having you again in with our future workshops and classes. Again, we'll send in more information out to you as those come available to us. Look for those either in your email or on the azsbdc.net website, or through the EACSBDC.net website. Thanks again, and we will talk to you again soon.